I'm Sulabh Agarwal, Global Head of Payments at Accenture. At Accenture, we solve client problems in payments. We help them navigate the changing landscape, whether it is to help them, create new propositions for their consumers or business clients, or help them solve the large infrastructural, technological, and operations issues that our clients face. Catch me on the Technologist of the Month show.
Okay, let's start with the rapid fire round just to break the ice. The first question is, at what age do you want to retire?
60.
How long does it take you to get ready in the mornings?
Half an hour.
Favorite color?
Blue.
What time of day are you most inspired?
5 a.m.
How many hours of sleep can you survive on?
6.
Pick one, Mark Zuckerberg or Elon Musk.
Elon Musk.
How do you relax?
Meditate.
How many cups of coffee do you drink per day?
None.
A habit of yours that you hate?
Comment on the kids' activities.
The most valuable skill you've learnt in life?
To be curious all the time.
Your favorite Netflix show?
Not a Netflix watcher.
Are you an early riser or a night owl?
Early riser.
One word description of your leadership style?
Collaborative.
Coffee or tea to kickstart your day?
Milk.
Top priority in your daily schedule?
My meditation.
Ideal vacation spot for relaxation?
Mauritius.
Key factor for maintaining a work-life balance?
Prioritization.
Memorable career milestone?
Making MD in Accenture.
A recent business innovation that caught your attention?
Agentic commerce.
All right, that's the end of rapid fire. Now we're going to move on to the longer questions, which you can answer with as much time and space as you like. The first one is, you went from an IIT engineering degree to an INSEAD MBA to Capital One, and then built a global payments practice in Accenture. What was the thread connecting these moves, and when did payments specifically become your passion?
Yeah, the common thread connecting all these moves is that I have a passion to continuously, reinvent myself every few years. And whether it was IIT, which was learning from an engineering perspective, going to the US with Capital One, where I was actually running a P&L from a credit card perspective, then moving with Capital One to Asia for new business development, again a change, to my MBA, to joining Accenture and doing strategy. Then somehow payments came in because of one assignment. I did lots of payment strategies. Then I've moved on to continue to learn in data. I used to lead data and analytics. Then I moved on to lead risk and finance, came back into payments. But then payments is there's never a dull day, right? Every day is new. And I think I thrive on learning and continuously, enriching myself to do something new and learn from whatever is happening. And I think someone gave me a good career advice early on in my career. He said, sort of, if every 2 years you're not reinventing yourselves, you're probably getting stale. So I've just kept it to my heart.
And you now oversee thousands of practitioners across Europe, North America, and growth markets. How do you keep a team that size intellectually coherent around a strategy?
Yeah, I mean, it is about clear communication. So we've got regular calls, sessions, visits, town halls, and clear cascade of what the vision is, what we are looking to achieve, what the clients are worried about, and what is it that we can bring to the table to solve their problems.
You've described financial institutions as standing at a defining moment, either becoming a banking utility or an everyday bank. Where do most banks actually sit on that spectrum today? And is the middle ground sustainable?
Yeah, they're all things to all people at this point in time. And it is hard. I mean, just to keep the infrastructure up and running, secure, being able to fight things like mythos, which is coming from the right, view different fraud threat actors from a security perspective coming from the other side. You've got agents coming and attacking you from other side, which means you have to do real-time scalable solutions, and infrastructure is not that easy, especially if you're running high volume. You've built your infrastructure long back. So I think that's more or less hygiene need, and organizations are a way to go to just keep that going. While they're doing that, there's a whole set of market movements in terms of the change in customer needs, new propositions, new forms of money like stable coins and tokenized money like tokenized deposits and others. Agentic commerce is picking up. You've got embedded finance, various things happening on the other side. And I think it's about balance between the two, but then also making the choices around what is going to be the key thing that the organization will stand for in times to come.
And what are the specific revenue lines that banks are losing, and who is capturing them?
I think there's a famous phrase called your margin or your revenue is my opportunity, right? And essentially all the big revenue lines have been at threat for some time. If you look at cross-border payments and FX, you've had so much innovation and so many new players that have come in. You look at merchant acquiring, and again, a lot of new competition has come in. And now it'll be the core account-to-account payments as well, which is kind of disrupted. And finally, it'll start to get into the B2B side of payments as well. So I think wherever there's money to be made, you can see that there's more and more competition. And you can see like organizations facing stiffer competition. Not to say that clearly the way to win includes a big factor, which is like trust and also long-term relationships, which is what is in the incumbent's favor. But needless to say, like if the gap between the proposition out there is significant to what the new organizations or fintechs are offering, you can see clear disruption.
You considered an influential voice on the future of money, digital currencies, real-time rails, and embedded finance. Which of those forces do you think is most underestimated by the industry right now?
Well, I think some of these things are kind of seen as given, right? So you mentioned embedded finance and others. I think that's a given, and everyone feels both on the retail side as well as the B2B side that there's more which needs to be done. I think where there's more uncertainty and organizations are looking at various options and being very cautious is the whole area of digital currencies as well as the agentic commerce side, where the more traditional organizations are still waiting and watching and looking at where there will be traction. I personally believe that agentic commerce has got a clear customer value proposition. I as a customer I'm already switching my searches from the traditional search engines to LLM searches, and US is clearly demonstrating as a market that customer discovery has already moved, and discovery to actually purchase and the transaction to follow is only that far away in terms of what's likely to happen. So I do believe both on the consumer side as well as the business side, which is where you're seeing agents being defined by the big procurement systems and the finance systems like SAP and Coupa and others. Both of those will mean that I'll see more activity happening there quite quickly. And I do believe that organizations will need to start investing in there quite sooner.
What about central bank digital currencies? They have been debated for years. Do you think we'll see mass adoption in your lifetime? And what's the real blocker?
Oh my God, this is politically charged question. I think it is more geographical. So if you look at Europe, we can see more traction in terms of digital euro. And at least if I was looking at a crystal ball, it's likely to happen that digital euro will see the light at the end of the tunnel. Whereas in some of the other markets like US, we don't see central bank digital currency really having traction. Then there are markets like the UK where there are experiments happening along all lines, and it'll become more clear in the coming months as to which direction it goes. I mean, if you look at central bank digital currency as a replacement of cash, of course it is, right? It's a form of money which is backed by the central bank, which gives guarantee that the bearer will get the money which is worth the amount. But if you look at mass adoption, I mean, not everyone uses cash today, so it is only replacement of part of the overall flow of money, as well as if you look at then trying to have a functioning economy with significant leverage possibilities. Commercial bank gives you significant advantages, as well as stable coins and others have proven that you can get the programmability advantages without needing central bank digital currency. So I think the jury is out in terms of what will really gain traction, but I think it'll be geographical as well as use case dependent.
Payment failures, outages, fraud, and misdirected transactions make headlines regularly. From your vantage point, are institutions getting better at operational risk or just better at managing the PR around it?
I think the risk is increasing day by day, right? So what used to be operational risk of a service which was batch-based, to when we moved real-time, to now what we are talking about is threat actors and threat vectors also moving real-time, as well as the real-time expectation from an agent perspective from the core infrastructure and others, and full scalability due to micropayments and the scaling of transactional infrastructure. I think this is not something you can, even if you have invested a lot of money and improved your infrastructure, you cannot rest on your laurels here. You have to constantly work on it. And I think that the activity and the amount of focus needed for resilience and security is only going to increase, even though the industry has moved significantly and will continue to invest in this area.
Real-time payments shrink the window for fraud detection to milliseconds. How are the best institutions handling that pressure?
Yeah, I mean, what real-time payments have also added is the way the whole liability framework works, right? Because like credit cards have been a mature set of instruments, and they had a liability framework around chargebacks and whether it's customer liability, merchant liability, payment service provider liability, etc. Very well defined and very mature over a period of time. Real-time payments has been organically developing those liability frameworks in terms of who is liable and where fraud is originated. I'll give you an example of the UK, for example. Like the fraud may be originating in social media platforms, but essentially the sending bank and the receiving bank have got 50-50 liability for real-time payments. So it's very hard to then control fraud outside of the liability framework, whereas certain geographies are starting to bring different actors together and, also to be held responsible and accountable and liable for the money that is losing from those networks. I mean, the other thing which is happening as organizations are becoming more mature in tackling the impersonification, fraud, and the scams which we are seeing, including the romance scams, the investment scams, and others. We're seeing a lot of these threat actors or the fraudsters shifting to the card network, and there is an increase in the fraudulent activity. In fact, client was mentioning to me very recently that they're finding that there are synthetic profiles being created in terms of the card actors who sit dormant for like 18 months, 2 years with perfectly, acceptable and credit-worthy behavior. And then suddenly you see across multiple banks activity where, they would defraud the whole set of actors there. So I think they're getting more sophisticated. So are the financial institutions getting more sophisticated in identifying as well as collaborating to figure out what's the best way to handle these fraudsters, and both preventative as well as recovery actions are being put in place.
Your remit spans mature markets like Europe and high-growth emerging ones. Do you see payments innovation happening faster at the edges in markets that skipped legacy infrastructure, or is the frontier still in the developed world?
I think both, and both have their advantages. I mean, emerging markets, like I would say Brazil, China, India, have had clearly the advantage of skipping a generation of infrastructural change, where they've gone with central infrastructures, but then also the support from the particular organizations have meant that the pace of change and innovation has really accelerated significantly. I had one senior exec move from the UK to India saying that I can hardly just keep pace with the market change in terms of innovation. Whereas I think mature markets have had more structural changes, like adoption of ISO 2022, like, open banking, open finance being very widely available, and the structural changes actually creating the foundations for innovation for fintechs to come in. So I think there are innovations on both sides of the fence. It's just that some are different. One set of innovations are different to the others.
India's UPI, now that you mention it, is often held up as a model. What did they get right that other countries have struggled to replicate?
I am genuinely impressed with the pace of innovation and central innovation. So payments by nature is quite networked. So what you have is you need the whole ecosystem to work in most use cases for the adoption to happen, and to really get over the adoption chasm in any new innovative proposition that you're trying to bring in the market. And what I believe India has got right is this whole pace of every quarter or every few months, there is a new overlay service, as you call it, in the West, they would come up with, whether it is UPI Circle, whether it is UPI 123, or whatever the new innovative, scheme or overlay service that they will come up with. And everyone kind of just adopts it. Just like, like Visa, MasterCard, or SWIFT will have regular releases. Everyone adopts it. And then the chasm of adoption just goes away and the whole market is transformed to the next set of service. And I think their real passion, focus on what are the real, issues both for consumers as well as businesses that they need to work on. The central organization, NPCI, is really focused on it and really driving it hard, as well as the regulator.
So you've presented at CBOS, Mobile World Congress, and other major stages. and you've built a thought leadership platform at Accenture. How do you distinguish genuine insight from noise in a space where everyone has a hot take on fintech?
Yeah. So I'll probably say that there are 2 or 3 qualifying questions I would ask before saying whether it is noise or a real change happening. I think the first will be, is there value in the whole, proposition, which means genuine cost reduction, genuine customer value, business value, and whatever the change we are seeing. And it could be theoretical, but at least the value needs to be real. I think the second thing I look at is, are the hurdles in adoption surmountable? So you go through whether it is a liability framework, whether it is the security fraud risk that you've been talking about and others. Are these issues genuinely surmountable? And are the industry actors working towards, solving it? And is there a common place where they can be solved? And I think the third question I would ask myself is the capital flowing enough in that space that the chasm will get, passed very quickly? And if there's enough capital flowing in, you can be rest assured that even if there are issues and problems, they can be solved for.
What's a prediction you made publicly that turned out to be wrong? And what did you learn from it?
Oh my God, lots of things haven't been that right. I mean, open banking adoption, for example, it made sense. Yeah, like open banking as a concept. I mean, we've been talking about data as the new oil, it being exposed to not just the individual institution, but to the market. There were enough fintechs in the market who were looking to exploit it, and there was enough money also flowing in, and there was quite a lot of hype in terms of open banking. It just took a lot of time to come up, and I think we as an industry sometimes, the trend may be right, but we underestimate the time it will take for adoption to happen. I think that was the one which I feel I definitely didn't get as right as I would have liked to, in terms of how quickly the industry will pick it up.
So retailers and non-bank players are increasingly building their own payments infrastructure. How should traditional banks think about that shift? And is it a threat or an opportunity?
Yeah, I mean, there will always be institutions who are looking to get in the payment space. The only thing I would say is, what is a quick realization is that there are different levels of regulations and capital requirements with respect to how far you go in the value chain, as well as then there is the expertise and the knowledge and the data you have to be able to do a good job at whatever you're looking to do. So there will always be institutions who feel they have deep pockets. They believe that their business model still benefits from the return on equity or return on investment that you get from a financial services or a payments business versus whatever their core business is, and they will look to go in. But then it also comes down to expertise as well as data that they have, and we've seen so many examples of retailers trying to do that and then, reverting back to their core business, finding it not so easy. But we have had other platforms trying to get into it, making it big in certain geographies, but then struggling in the others. So I don't think it's a, easy answer that, a straightforward answer that's a good idea. Having said that, it is proving that demand is there, and you were mentioning embedded services, embedded financial services. There is a demand, and banks and financial institutions and payment institutions have a opportunity to embed the offering, the platform into their clients. I mean, most banks, large banks, would have been dealing with the treasury department of a large corporate. They have an opportunity to go work with the front end, the marketing, the customer departments of large corporates and merchants, and helping solve their problems. And I think that's what the need is, of embedding an end-to-end proposition. And you can already see movement in the market where organizations are looking to do it.
And where does the loyalty and rewards economy fit into all this? Is it still a payment differentiator or a race to the bottom?
Well, Adyen have just announced buying a big loyalty company, so you can see that there's still scope. You've had various other examples of, I mean, card loyalty is still a big factor as to how organizations or how individuals are looking to buy financial instruments. I think what it will probably become more integrated in all forms of payments. And I would say because of the adoption of agentic changes. Because when you look at individuals trying to figure out what's the best proposition in the market, you may miss out on the various features, loyalty, and other benefits that a proposition provides. When you replace the individual being assisted by an agent, you can be rest assured that the agent will look at it more holistically as long as you have given it the right prompt or even to optimize. And this is where I think loyalty associated with the transaction itself is going to become a huge factor in selecting. I mean, we were talking about how in future, it is not the individual that will choose your payment type. It will be the agent choosing your payment type. And whether it is cost or whether it is the overall value proposition or the benefit that you provide into the agent, these factors will become even more important.
So let's change track a bit here. Tell us a bit about your day. You wake up in the morning. How much time do you spend on emails? How much time do you spend in meetings? What is your day like?
Yeah, I mean, morning is personal time and getting the kids out. But then, yeah, my day starts in the office around 8 a.m. Yeah, it's pretty much back to back. I try and do my meetings or calls in 15 minutes, sometimes 25 minutes, just to squeeze that extra 5 minutes or 15 minutes to walk around, to see people, to meet them, as well as catch up on emails. And it typically finishes with an evening event with teams or with clients. But I find it really energizing to be with people, to solve real world, genuine problems as we work through with different clients on the various problems they have. And there's never a dull day in payments.
And what kind of talent is Accenture looking for in the market today?
Curious, analytical, really driven individuals. Like, I mean, for me, that's priority one. Of course, capability and problem solving, analytic ability is important. And the last thing is teamwork, right? Can you fit in the culture, in the team? Do you know your stuff still? Can be humble about it and work jointly to actually create the right outcome for our clients.
Okay, so back to the big questions. Regulation across payments, from open banking to instant payments mandates, is accelerating in many markets. Are regulators ahead of the industry, behind it, or just in a different conversation entirely?
I mean, the tech industry is like sprinting at the moment. Yeah, the rest of the industry is trying to keep pace, and with the agenda being defined by the AI and the tech players, the rest of the industry is trying to keep pace, and then the regulator also trying to keep pace. And it's hard, right? Because every day is a new day. You don't know what new AI release is going to come out, what new disruption is going to come out, what new possibilities will be there, as well as what new threats will be posed by the change. Yeah, it's hard work. It's hard work, but it is exciting as well. I think regulators are in the same mix, where they need the right talent and capability to be able to understand what is changing. I mean, you were talking about noise versus real change, and what is the likely impact as a result of that change. And they are trying to keep pace as well.
AI is moving from pilot projects to core infrastructure in financial services. Where in the payment stack are you seeing it create the most tangible impact today? And where is it still mostly hype?
I genuinely believe that AI value is real, front to back, top to bottom. Where it is starting is in the core ops and tech space, ops tech and risk, I would say. I mean, risk, whether it is fraud, financial crime, and others, we have always used AI to identify the trends, to be able to work through the various possibilities, the probabilities of either default or financial crime or whatever the case may be. Operations, there is big use case. You can see how a lot of repetitive work can be automated as well as enriched, where humans are capable of doing more and faster. And tech as well, in terms of as we have gone through the whole tech revolution, and I mean, whether it's coding or implementation of tech, we are seeing rapid growth in adoption. So I don't think any of this is hype. I mean, they're all real. On the front end as well, I would say, whether it's marketing, whether it is customer personalization of offerings, I mean, we are seeing lots of use cases where AI is very real and the clients are getting immediate benefits. I think what needs to happen now is, instead of individual pockets of improvements, a full end-to-end orchestration of AI to actually help redesign the end-to-end processes is kind of the next wave as we see better adoption and real business cases come up. And the big unknown in this is the cost of tokens themselves, and at what point there's the break-even point of the cost of tokens versus doing it in the more traditional way itself. So I think all of those questions are still open questions and need to be answered.
So looking out 10 years, what does the payments landscape look like? And what role do today's banks actually play in it?
If I had a crystal ball for 10 years out, I mean, we would have progressed so much on the various dimensions of payments. I would have seen the payments propositions being completely instant and invisible from a customer perspective, very rich from a proposition perspective. There'll be smart contracts all over, value-added services completely linked in, fully embedded into the end-to-end life cycle, so that they will be completely seamless and not very visible. And I think a lot of focus will still be on the core infrastructure, because I do believe that the threat actors from a security resilience perspective will continue to demand a lot of focus, even in 10 years from now, because it's not going to become easy. But having said that, that's what makes our jobs exciting, and all those who are working in payments, this to be a great place to continue to be involved in.
So the last question for you is of a personal kind. What would you be doing in your life if not this?
I would be owning a sports franchise. And cricket or football, soccer, as they call it in the US. One of those things, because I think when everyone will be bored of technology and I think sports, media, and entertainment will probably still be very high on people's radar, and everyone will move towards that. So I think that's what I would be doing if it is not this.